Hey everyone, welcome back to the Investing Hub. My name is Nick, and today I want to talk about something big. I've changed my mind on Bitcoin. In my last prediction video, I said that by the end of 2025, Bitcoin will be worth over $200,000. But now that Bitcoin is dipped below 80,000, that plan is no longer realistic. So in this video, I'll walk you through my updated price expectations, exit strategy, and what I see coming up for the market into 2026. Let's get into it. Now that we've gone through the charts, let's look at what's happening behind the scenes. The fundamentals that are shaping Bitcoin's future. One of the biggest forces right now is global liquidity, and frankly, it's pretty tight. There are several macroeconomic pressures building up that are likely to keep liquidity constrained for at least the next few months. First, we have tax season, and this always puts pressure on financial markets. Investors need to sell assets to pay taxes, and that includes both traditional stocks and crypto. On top of that, the U.S. debt ceiling is being reinstated, which is another huge liquidity drain. The Treasury needs to spend big, and when that happens, the government tends to draw down its accounts, which impacts the broader financial system. The Treasury General Account, or TGA, is already being drained. It's dropped from $820 billion down to $360 billion in just a few weeks. That's short-term liquidity positive. It means money is flowing into the system. But once the debt ceiling issue is resolved, they'll have to refill the TGA, reversing that flow and tightening liquidity again. Now let's talk about the Federal Reserve. The Fed hasn't pivoted to quantitative easing. Not yet. They've only hinted at slowing their current quantitative tightening, and even that won't happen until mid-2025. Interest rates are still high, and the Fed isn't in a position to start printing money again unless something breaks in the system that forces them to act. There's actually a decent chance that's exactly what happens. If a recession hits or a credit event unfolds, the Fed could be forced to pivot. Macro analysts are projecting up to a 61% chance of a recession being announced between now and October. So we're likely in this weird limbo where liquidity remains tight for the next 2 to 6 months before any major policy shift. Bottom line, we're in a holding zone. Liquidity is stretched, macro risk is high, and while Bitcoin might hold its ground, don't expect fireworks just yet. But once the Fed pivots, and they will, that's when things get exciting again. Let's clear up a huge misconception that's causing a lot of confusion. The difference between M2 money supply and global liquidity. These are not the same thing, and misunderstanding this can seriously mess with your market outlook, especially if you're trading Bitcoin versus altcoins. M2 money supply is a measure of how much money is floating around in the economy, basically cash, savings accounts, and short-term deposits. Global liquidity, on the other hand, is much broader. It includes central bank balance sheets, the TGA, and other tools like reverse repo operations. So when people say liquidity is tight, they're often talking about global liquidity, not just M2. Now here's where it gets interesting. Bitcoin is highly correlated with M2. When M2 rises, Bitcoin tends to follow. So if you're focused solely on Bitcoin, tracking M2 can actually be a pretty reliable signal. And yes, recently M2 has been ticking up, which is bullish. But for altcoins, M2 doesn't tell the whole story. Altcoins move in response to the broader liquidity picture, and that includes what central banks are doing behind the scenes. If central banks are tightening, even if M2 is rising, altcoins tend to underperform. That's why you see Bitcoin holding up better while altcoins remain sluggish. You need to look at central bank balance sheets and the global liquidity index to get the full picture. One great example is during the 2020-2022 cycle. Altcoins exploded in value during a time when central banks were pumping liquidity into the system. But now that central banks are shrinking their balance sheets, even if M2 is growing, that liquidity isn't reaching altcoins the same way. So if you're waiting for an altcoin season, you'll want to watch for a full Fed pivot, not just M2 growth. So remember, M2 is great for Bitcoin. Global liquidity is what matters for altcoins. Make sure you're tracking the right signals based on what you're investing in. Otherwise, you'll be bullish on the wrong assets at the wrong time. Alright, let's get into what you really came here for. the updated Bitcoin price target and timeline based on everything we've covered. If you've been following my channel, you know that my previous target was $200,000 by the end of 2025. That's not off the table. But it is being pushed back, with liquidity staying tight longer than expected and no QE in sight until at least mid-2025. We're likely looking at a longer cycle. I originally expected QE to kick off in January 2025, followed by a sharp rally and blow-off top by mid-2025. But that window's shifting. Now the earliest realistic QE could begin is summer or even fall 2025. That means I'm adjusting my exit window to mid-2026. This allows 6-12 months of runway post-QE to let the rally play out fully. And here's the bullish twist. Longer cycles tend to produce higher tops. So if we get more than a year of expansion once liquidity returns, Bitcoin could not only hit $200K, but potentially push toward $300K. Now let's talk about where I'm stacking. Anything between $76K to $85K is a great accumulation range in my view, but only if the 50-week moving average holds. If we close a weekly candle below $76K, that's a red flag and I'll reassess. Until then, I see this as a healthy bull market correction, not the start of a bear market. I've also updated my personal exit triggers. First, I'm still holding for a price above $200K. Second, I've shifted the timeline from 2025 to mid-2026. Third, I'm no longer watching the 21-week EMA as my bear market signal. Instead, the 50-week simple moving average is now the critical level I'll monitor for trend shifts. To sum it all up, I'm bullish, but I'm stretching the timeline. I believe the fundamentals support a higher target. We just need to let liquidity conditions catch up. If you're in this for the long haul, now's the time to stay sharp and patient. So, where does this leave us? Right now, we're in the middle of a waiting game. Liquidity is tight, momentum is slowing, and market sentiment is mixed. But if you've been through a few crypto cycles, you know this is nothing new. In fact, this kind of environment often sets the stage for the next big move. You just have to be willing to wait it out. Bitcoin is showing strength by holding support at the 50-week moving average. That alone is encouraging. It means that even amid all this macroeconomic noise, Bitcoin continues to respect long-term technical structures. The market is maturing. Corrections are sharper, yes, but the recoveries are more methodical. That's a good thing. It means we're not just running on hype anymore. From a fundamental standpoint, we're also seeing the groundwork being laid for the next leg up. Whether it's stealth QE through mortgage-backed securities or indirect liquidity injections via treasury support, the central banks are starting to position themselves to act, even if they aren't officially calling it quantitative easing just yet. And when they do pivot, that's the moment to watch. If you're a long-term Bitcoin holder, this is where you sharpen your edge. This isn't the time to panic, overtrade, or chase short-term gains. This is the time to build your conviction. Historically, the periods of low liquidity and market boredom are exactly when the smart money starts to accumulate in silence. And that's when opportunities are born. It's also crucial to stay informed. A lot of people get shaken out simply because they don't understand what's happening. But if you've watched this far, you now have a much clearer understanding of how macro factors affect Bitcoin and what signals are truly worth watching. That puts you ahead of 90% of retail traders out there. So whether Bitcoin takes 6 months or 12 to break out again, I'm not stressing it. I've got my plan, I've got my signals, and I'm not letting volatility scare me out of a good position. If you're in the same boat, welcome. This is where real investors are made. You just have to be willing to wait it out. Alright, that's it for today's update. If this breakdown helped you understand the current Bitcoin landscape a little better, make sure you hit the subscribe button and turn on notifications. I'll keep you posted with updates as we move closer to the second half of 2025, especially when liquidity conditions start to shift. Let's check back in by Q4 of this year and see if Bitcoin is making new highs, if the Golden Cross has formed, and if the Fed has finally blinked. And if you've got friends, family, or followers who are doubting crypto right now, share this video with them. Let's see who's still standing when the next bull wave hits. Thanks for watching. Stay safe, stay sharp, and I'll see you in the next one.